Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Thursday, December 23rd, 2010. This morning I'm saying Merry Christmas. Heading into tomorrow's shortened session due to the Christmas holiday. Worse than expected economic data coming out is actually getting a reprieve. So it's kind of like, maybe the market participants are already in the holiday spirit and they're not actually punishing the currencies for worse than expected economic data. And, one of the main ones I'm talking about here is we're looking at the Kiwi here versus the dollar on a daily chart. All right, now in New Zealand, they actually reported a GDP contraction of 0.2% versus an expectation of a gain of 0.1%, which brings the year-over-year figure down to 1.5% growth from an expected 1.8% growth. Now, apparently, maybe the powers that be and the people in the market were expecting a worse than expected number already. So the fact that it wasn't way worse than expected, perhaps is news for for a reason to celebrate here and to push Looney higher, or push Kiwi higher, and that's what we're seeing. We're seeing Kiwi higher. So, while it was a miss and a contraction, a lot of this was expected due to the earthquake that they had previously. Just want to take a quick look at dollar CAD here. See, we're setting up a sideways range. Before the year started, I came out with a report. Basically saying that I thought this pair dollar CAD would end at 101 with the basically the Looney trading at about 99 cents. So that looks like it's still in play there. They just came out with the monthly reading of GDP and it showed a gain of 0.2%. They were slightly lower than the expectation of 0.3%. But the fact that we have this mixed U.S. economic data, there's really not much movement going on here, and the Looney's not getting punished for worse than expected data. I just want to quick peek at the pound here. Pound is actually higher. Looks like maybe we're putting in a little short-term bottom, although 155, which was formerly support, could now become resistance. Over in the UK, a Bank of England policymaker came out and he stated that he thinks that perhaps the UK could see a quarterly GDP contraction next year. So, I don't know why or how that's good news. We do know that they're going to slow the economy down there due to the austerity measures, but maybe that's what they were sort of waiting for to be able to push the pound higher here. So again, it's a case of when bad news is actually good. All right, and then lastly, we had the economic data in the U.S. come out. And a little bit of a situation of what we're calling the new normal. All right, another 420,000 people lost jobs last week. All right, but those who haven't have actually seen their incomes rise to by 0.3%, which was a little bit, it was a little bit less than expected. Or actually, no, it was a little bit more than expected, rather. I'm not sure what I'm talking about there. Also, we had personal consumption data that came in lower than expected, as did durable goods orders. All right, and then personal spending was slightly lower as well, at 0.4% versus an expected 0.5%. So mixed data here in the U.S., but nothing major that's going to cause markets to run and retreat or anything like that. One thing I want to point out again was a continuation of yesterday, is Japanese yen strength here. I pulled up Fibonacci retracement level yesterday, identified the 38.2% level at 92.8450, and we literally just came right down, touched it, bounced off of it. We can look at it on the 15-minute chart here. All right, and you can see how that basically happened. Came right down, one quick touch, and then bang, back up. And we're going to see how this trades for the rest of the day. But we're seeing some yen strength here due to some bond selling, which is driving yields a little bit higher. And next week, there's a slew of economic data coming from Japan that could be important to the market. But right now we're looking at holiday volume, which means very light. Yet we do still have some moves happening. You can see the Kiwi bounce back from its previous couple days selling. All right, and then it looks like also that we have these year-end ranges sort of being put in and taking place. Next week's going to be also a holiday shortened week. All right, and anybody who needs to do window dressing has most probably done it already. So, it's kind of like this time of the year, it's like I struggle a little bit to find these fundamental reasons why things may be moving, but, nevertheless they exist. It's just that, it takes a lot less to be able to move on certain data. So, that's what we're looking at here this week. Just want to wish everybody who celebrates Christmas a Merry Christmas, and, we'll see you next week. If you're trading today, just know that tomorrow is a shortened session, all right, and that it's going to be over by 12 noon Eastern Standard Time, so you want to be out of positions for that if you don't want to hang on over the weekend. So that's what I've got for today. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.